With the markets right now, let's call it mixed, and the Russell still on pace for its sixth record close of 2026. Let's get right to the floor show. Joining me live, Regions Chief Investment Officer Alan McKnight. Wow, Alan, nothing like a quiet Friday to wind down a wild week. Not quiet, obviously. Except for the Russell, though, the rest of the majors look to close out the week, let's call it fractionally lower. Take the temperature of the markets so far this new year.
We really like the temperature of the markets right now, and it's exactly what you just touched on, which is small caps and mid caps are doing well. We're finally getting that broadening of the market that we've been waiting for the past 12 to 18 months. So we see this as a really positive sign. It may have been a little mixed this week, but we think it's a great indicator for the rest of the year.
Great indicator for the rest of the year. But what do you make of what's moving today? And that would be the semiconductors once again. You're not such a fan of technology in 2026. Why not?
We're not. We just think it's had such an incredible run as a sector. Now, underneath that, there are some names that we like. We still like NVIDIA. We still like Oracle. But when you think about the sector more broadly, it's had such an incredible run, not just last year, but really in 2024 and part of 23 as well. So we just think it's time for the rest of the market to catch up.
So you're saying it's time to fade the AI trade, the AI semi-trade, just a little bit?
We think it is, and it's really a relative trade if you think of anything else. It's more that some of these other names can do well. It doesn't necessarily mean that some of these names within the technology sector have to do poorly. They're just not going to keep up with some of the other parts of the market.
Okay, so if you're fading that trade at least a bit, what do you shine the light most brightly at?
We still like communication services. We've liked it for the past year. We still like it. We actually like consumer staples, and more specifically within consumer staples, we like some of these large retailers. Just to borrow from the Mark Twain line, the rumors of the consumer's demise are greatly exaggerated. Names like Costco, Walmart, Dollar General are really benefiting from this trade down effect. So we think that can actually do well. It's done well thus far in 26, but we think that trade can continue through the rest of the year.
It was interesting to watch this week and the earnings reports, specifically the big financials, then yesterday the regionals. Is there anything about that sector or subsector that you like? You got PNC reporting, and they are hitting an all-time high. Kind of a different picture for M&T Bank and some of the other names.
We still like the financials because, one, we think that the underlying consumer's in good shape and the U.S. economy is in good shape. That's always been good for the financials. And then, two, as rates continue to come down, they don't have to come down a lot. We're not anticipating the FOMC cutting more than a couple times this year. But that's still net positive as long as we see a nice linear trajectory for the economy.
Other net positives that could help the economy. A lot of people are talking about the big, beautiful bill that is now the law, and they're expecting that in 2026 that will certainly put a base or some type of buoy underneath certain areas of this. I'm looking at what Michelle Bowman of the Federal Reserve, she is a governor, came out to say today, and she was signaling some concern about the jobs market. And she said, you know what, we better be ready to cut interest rates. So now she sounds a lot like what President Trump wants to hear, and what some of them, we'll talk about this in just a minute with Greg Ip of the Journal, but what some of the candidates have pushed for, and that is to make sure that you keep the rate cut option on the table.
Well, we think that there is certainly the possibility that rate cuts get pushed out a bit. I mean, the FOMC, given what we've seen with inflation and the CPI print this week, as well as what we heard last week regarding unemployment, it's not obvious that the economy is really going over a cliff by any means. It's really pushing along. And so within that type of environment, the FOMC is going to be a little more judicious. We'll know more in a couple weeks when they meet. But I think it's one of those scenarios where the economy is in pretty good shape, so there's going to be a lot of debate going on with the FOMC.
Alan, we're looking at, again, mixed picture here, but the S&P clinging to a 5-point gain. We're watching it every tick of the way on this Friday. Thanks for joining us.
Thanks for having me, Liz.
You bet.